Hey traders, my name is Akil Stokes, Chief Currency Analyst and Head Trading Coach over at TradingPower.com, and thank you for joining me once again for another Forex Market Preview video. Today we're going to get started on the New Zealand dollar and we're going to look at the daily chart. I have a few trading opportunities that are on my radar. Again, there are swing trading opportunities, there are day trading opportunities, there are trend continuation opportunities, counter trend trading opportunities. Pretty much the entire basket is at play on this pair. However, we're going to start by taking a step back and really just analyzing and reviewing what price has recently done. And to make things easier for you, I'm going to show you a nice little indicator that we use with some of our newer traders just to help to identify with what price action is doing. And seeing how typically for you traders that watch the YouTube site, we attract a lot of newer traders. I think this is going to be great for just allowing you to see a little bit more clearly what I'm looking at as far as when I talk about swings and whatnot in the market. So you can see that previously the New Zealand dollar has been in a bullish trend, and we've recently made what I call a trend rotation, a bearish rotation, and actually have confirmed a bullish or a bearish trend, excuse me. And we start with our most recent swing low right down here, and you can see that we made a new structure low. This is our initial swing low to our new structure high. We then put in what I call an outside return. You can also look at it as being a retracement, a pullback. The terminology really doesn't matter as long as you know what you're looking at. And we follow that up with a new structure high right here. And this is what confirms the bullish trend. If we look left, you can see that price action breaks and closes above our previous structure highs looking left. We then come down to put in another retracement, and we actually consolidate a little bit. I know I have my indicator to measure the main moves, but we actually come down and put in a little bit of a consolidation here before breaking and closing below. And this was actually a head and shoulders pattern that we looked at a few months ago if we just were to measure it like this. So once we saw that violation, right, once we saw this new structure low, so a break and close below our previous outside return level, this is what I call a bearish rotation. And this is when I start to ask myself, well, we could be seeing a violation of the previous trend. And if we're going to see a new trend form, meaning a bearish trend in this case, how can I get involved? And there are a few ways to do so, all depending on how aggressive you are. Now, head and shoulders traders, you can see this was essentially a break of the neckline. And once we retrace back here in the structure, we had a retest of our shoulder area. You can see price made an aggressive probe higher. However, it was beaten down, rejected, and we followed that with a new structure low right here, confirming our trend. And when I look for a confirmation in trend, I want to see a 3-point move. I want to see, right, an extension down. Let me just delete this and we'll just take a look at the notes that are on my chart. I want to see an extension down, right, like that. I want to see a retracement back up, and then I want to see a new structure low form to confirm that trend. Now, yes, could be a complex pullback in some cases, and this is why, really working on the skill of reading a price chart comes in handy. It's not always going to be like this. As you know, the markets are dynamic. The markets move in fractals, so what that essentially means is that there are smaller trends within bigger trends, and sometimes a smaller move can only be part of a retracement of a bigger move. And that's something that you're going to understand more as you develop your skill on how to read a price chart. But the basic rules of trading, the basic concepts that I follow as far as trend identification is looking at the violation of previous swing points. And when we get our move right here, this is a violation of our previous new structure low. This confirms a bearish trend. Now, this past week, we did put a retracement back up to here. And this was an area that we looked at in our syndicate program. We talked about this earlier on in the week. I believe it was Tuesday, and I told our traders, hey, this is where you need to be looking for shorts. This is where you need to be looking for shorts. Not only has price action confirmed that bearish trend, but we've pulled back into a previous level of structure. If I zoom in, right, you can see these lows right here. I know it's hard for some of you guys to see, but the candlestick lows here, the long wicks to the downside, this was an area that I was very interested in. And you can see as we pushed up into this area, not only did we have a rejection of our bullish move right here, but we followed it up with a few doji days. And dojis, these are essentially neutral candles, candles that look like if I can draw straight here, candles that look like crosses and basically mean that it's indecision, right? The bulls push one way, the bears push the other way, and it ends up being a stalemate. Give me a second, guys. My kid just woke up. I'm gonna go. I'm gonna pause the tape and go walk him downstairs. So take a brief pause. All right, sorry about that, but fatherly duties always come first. Where was I? So we put in a few indecision days right here, and we're telling our traders in the syndicate program to look for shorting opportunities. And lo and behold, we had a very aggressive move in the market. And this is kind of a cool thing with technicals and fundamentals. Yes, we had some fundamental events come out. There was a big political issue that came out in New Zealand, but I've always been a believer of, hey, the fundamentals may move the market, but the technicals tell you the where. So, technicals will explain to you what levels to look for reversals at, what levels to look for exhaustion at. The fundamentals may move it there quickly if we have good news or bad news, but technical analysis is key in predicting where price action will go next. And you'll often see that even after major fundamental events, they tend to stop at technical levels. So very well done for you guys in Syndicate that caught this move. It was actually a pretty good week overall. I've been away for the last few days, so I'm not sure if Jason Greystone had any trading opportunities on Friday. But last I remember, we were up about 165 pips for the week. So last week wasn't too great. We were down about 100 pips, and good to see that we can recover off of that. And that's the key of trading. You're going to have down weeks, guys. Don't get me wrong. You're going to have many down weeks in trading. But as long as you stick to your game plan, right? As long as you continue to follow your trading plan and stay disciplined, you should be able to overcome them pretty quickly. It's one of those one step backwards, two step forward type of deals. And that's essentially what trading is. It's extensions and retracements as far as your equity curve goes. But anyway, the question now remains, what is next, right? That was great, Akil. We looked at all what has happened in the past. Now, how can we take advantage of this in the future? And this is where we want to go through that IPDE process, and that is identify, predict, decide, execute. If you are unfamiliar with this process, make sure you grab a pen and paper right now so that you can take notes on it. I'm actually going to leave this on. Also, you may want to head over to our website, tradeempower.com. Let me just load it up for you real quick and watch this free training. It's about a 2-hour free training session. So make sure you put away some time for it, but free training, go ahead and watch Into the Gray. Again, it talks about why the markets move, how to apply OODA loop theory and the IPDE process to keep you one step ahead of the markets. And look at that, how to read a price chart using new structure high and new structure low principles. Also, make sure you sign up on our email list as well. We've got some pretty cool deals that are out right now. I'll tell you about a few later. But all right, so let's go through this process. Identify, predict, decide, execute. So I've identified that we are in a bearish trend here, right? I've also identified that the most recent move in the market was a break below, close below, so a new structure low right here. This allows me to make the prediction that price action is likely to continue lower. Now, this is a two-part prediction. So I know that price action is likely to continue lower, or I'm under the assumption that price action is likely going to continue lower. We never know what the markets are going to do, and we're foolish if we ever think we do. But we can make predictions just based on history, right? The next question is, where is price action likely to go next, and how is price action likely to get there? And there's a few things that I can do here. The market likes to move in equal measured moves. So if I just take here, I'm going to delete this one more time. If I take our most recent swing high to swing low, which is going to come from right here to down there, and I copy and paste this level, that's going to give me a 1-to-1 measured move. So a projection that price action, if we move in a 1-to-1 measured move, will come down to our level right here around, what is this, 68.25, I want to say. 68.30s. If you look left, you'll also see that that 68.30 level lines up with what? Structure. You guys know the saying, look left, structure leaves clues. So I can make a projection that price action is likely to continue a little bit lower. Now, for me personally, I don't think we're gonna, well, let's say this. If I'm looking for where price is gonna go, I actually have a more conservative level. I'm gonna take a level right between here. You can see these little green lines are essentially where our DSR levels are. If you guys are familiar with our DSR indicator, I'll draw it on. It shows us dynamic support and resistance levels. Let me just put it on here wherever it's at. I got all these indicators here to help with life, but I never have them on at the same time. So let's find my DSR. Do you guys see it? You guys see it? Here we go. And let's just set this to the daily chart. You'll see there's going to be a few different DSR levels in this area. And the ones that I'm paying attention to, just looking at structure, are going to come from essentially our lows right here to our lows right here. So looking at the lows of this kind of retest of consolidation in here, then looking at the lows of our lower consolidation level. And that'll come in play a little bit later. So yes, we can, if we get a one-to-one measure move, we can come down to retest our previous structure lows down here. I think the more likely scenario is that we start to consolidate a little bit higher near our previous levels of consolidation. So I've identified what the market is doing. I've predicted what I think the market is going to do next, where the market is likely to go. Now I want to ask the question, how is the market likely to get there? And there are two ways, right? One way is that, well, we put in another big bearish candle and we just continue straight down there. If that's the case, we're going to have a counter trend trading opportunity where if you're looking to buy, you can buy at previous structure support down here. So structure traders, this is the area that you're looking at to buy. Another way would be we retrace and then extend down to this level. So you see, either way, I'm expecting the market to continue lower, but I don't know how it's going to go lower. And depending on how it does, there are two different opportunities. Now, if we're predicting that price action is going to retrace and potentially go lower, the question is, where is price likely to retrace to? And as a swing trader, I would be looking for this level right here, a retest of our previous new structure low. So right in here, this would be the optimal level, right? This is where our previous level of structure is at. That would be the optimal level to look for a potential selling opportunity. And even if we take a Fibonacci retracement on, let's see, it looks like a 382. Let's take our Fibonacci retracement tool from our swing high to our swing low. Yep, you're going to see we have a 382 Fibonacci retracement right at that level, which if we are in a strong trend, that's the Fibonacci level that we would expect to be tested and then see a reversal from. So as a swing trader, keep an eye on this level for next week. Keep an eye on your 70-50s levels, right, for a potential chance to get lower. And of course, that kill zone is going to go from 70-50 all the way to here. So as long as we don't violate these previous structure highs, we're still in that kill zone, that zone where we can look for a potential reversal. But it's going to start at our previous structure lows right here. Now, if you are a day trader, I'm going to bring over my hourly chart real quick. If you are a day trader, here's what we're looking for. You can see the market is starting to lose momentum. This is another reason I'm thinking that we're going to see a pullback instead of just an extension down. And you can see when I mean losing momentum, I mean that you can see the slope of our initial move down is very, very sharp, right? We cover a lot of price in a little bit of time. Then you can see, right, we start to, instead of putting in that steep slope, we start to kind of, right, even out a little bit. The market starts ebbing and flowing and consolidating a little bit more. And we compare that with divergence on the RSI. You can see our RSI is pointing bullish. Our price action is pointing bearish. This is kind of a falling wedge, a falling channel. Typically, it means that the market is running out of steam and we can expect some type of reversal from it. And again, that's going to come right into our idea of expecting a pullback before a continuation. So we know that swing traders, you're looking for a move back into our previous structure lows right here at our blue DSR level. Day traders, however, here's what you need to be looking for at the start of the week, right? As the market bounced up and down, right? So as we ebbed and flowed in this area, we've created multiple levels of structure. And as a day trader, a retracement to any of these levels of structure is going to be a chance to take a shot on a short opportunity, just in case we don't get that full retracement. So looking for an opportunity right here, about 69.75s, will be a decent opportunity looking for shorts. Looking at another area right in between here, between our 70.10s, let's call it, 70 tens and 70 cent even is going to be another area. And of course, a retest of our previous structure highs right here is going to be another area. So as a day trader, you're marking down these areas on your chart and you're looking to say, okay, if price action hits this level, then I need this to enter short. If price action retraces to this level, then I need this to enter short. And you can just keep marking off those areas and taking shots at a potential trade lower. Now, you may not get it, but that's fine. That's why we do analysis, right? Most of the time when we do analysis, we end up doing something like this anyway. Right click, drawing tools, delete. So those are your opportunities for trend continuation traders. Counter trend traders, there are a few ways to enter. Again, we can wait until price action comes down to our previous levels of structure. Down here, we can wait for maybe an oversold scenario on the RSI and wait for some type of price from reversal price pattern. That can be as easy as a doji engulfing candle. It can be a double bottom. It can be a 2618, whatever entry technique you prefer to use. And again, that's going to differ depending on if you're an aggressive trader versus being a conservative trader. However, if you're looking for a very, very, very aggressive way to enter, we also have something else here. And I want to let you guys take a guess if you can see it before I point it out to you guys. All right. We actually have an advanced pattern formation forming as well. So we have all these funny looking ebbs and flows in the market, a swing low to swing high to swing low, right? When we put these, the combination of these ebbs and flows, these extensions and retracements together, and we add them to very specific Fibonacci levels, we actually have a very powerful trading opportunity, and these are called advanced pattern formations. Now, the question is, which advanced pattern formation is this, right? And I'm going to bring in a cool little tool here called my Pattern Assistant. And, you know, this is a great tool for cutting down the learning curve and building confidence. I didn't have this when I started trading. I kind of did it the old school way, and by taking the time and drawing out fibs and doing this and doing that. And what we found, or the feedback that I've heard from all of our traders that have this tool, is that one, it adds their confidence. Right? There's no longer a question of, are they looking at what they're really looking at? They know because they have an indicator that confirms it for them. And it also cuts down on the learning curve. So it allows them to be a lot more comfortable with trading advanced pattern formations, and it makes life a lot easier. It makes the analysis time quicker, which is a blessing if you're a day trader and a blessing for anyone that has limited time to analyze the market. But I'm going to start by clicking at our swing low right here. I'm going to go from our swing low to our swing high right here. And I'm going to measure out our retracement. And you can see as I measure down, right, the tool shows me what potential pattern formation it could be. At this level, it could be a potential cipher. At this level, it could be a potential cipher or a bat. If we were to retrace lower, it could be a Gartley. A little bit lower, it could be a butterfly. So it's pretty cool. You kind of, instead of going through the checklist manually, right, and looking at your trading plan, looking back at the charts, looking at your trading plan, looking back at the charts, it kind of shows you what should be on your radar. And as I measure this out, you're going to see that down at that level, right, you can see it's pretty cool. It locks in for you. Look at that. It locks right in on that level. Down at the level that we drew out earlier, we're actually going to have a potential bat pattern completion here. And that would allow you, or at least allow me, I trade my advanced pattern formations aggressively. That would allow me an aggressive entry at this level. So it would allow me the opportunity to just put a limit order there, put my stops on, and get a chance to trade this back up. And you can see it measures out targets, measures out your stop loss as well. And what's cool is all this is customizable. So if you don't like a stop level all the way down here at 67.87, well, go into your indicator tab here. Go over to your pattern assistant, find your bat pattern, and change the rule. Let's say you want a 50 pip stop loss. You want some extra breathing room. Change it to 50 pips or however you want to use it. Apply it. And then as we draw this bad boy back on, whoop, swing low to swing high. Boom, boom, boom. You can see it locks in the new stop loss in place. So pretty cool stuff here. So a lot of opportunities here on the New Zealand dollar. Again, there are swing trading opportunities, there are day trading opportunities, there are counter trend trading opportunities, there are trend continuation opportunities. So this is certainly a pair that's going to be on our radar. heading into the week. And for you guys that are interested in this pattern assistant tool, it's pretty cool because we're actually giving it away for free. Now, again, I just got back in town, so I don't know how long this deal is going to last. I didn't have a chance to talk to the guys at HQ, but I know we're giving it away for free when you buy our advanced pattern trading course. So if you head over to our website, tradeempowered.com, just click this little banner right here that says learn to trade profitable pattern formations even if you've always struggled. And you can see that when you buy our advanced pattern trader course, we're giving away the pattern assistant software for free. So I don't know how long this lasts, but if you're interested, I would certainly take advantage of it now and save yourself $500 and get yourself a free indicator as well. So I wish you guys the best of luck in this week's trading. I'm excited to get back. Again, this month has been pretty slow, but also pretty profitable. So I'm happy about that. And as we get into the last few weeks of trading, again, our trading year typically ends about Thanksgiving. So we're about a month away. Well, I'm excited to keep going and see how high we can grow that equity curve for the year. So until next time, traders, plan your trade, trade your plan. Transformation members, I will see you in the strategy lab tomorrow. We're going to talk about consolidation patterns, so triangles and wedges and falling channels and rising channels and all that fun stuff, basically breakouts. Syndicate members and live room members, I will see you throughout the week as always. And you guys enjoy what's left of your weekend. Take care.